So Bitcoin took a little bit of a tumble down yesterday. This was kind of as expected, as we were in higher highs and higher lows, which have a tendency to want to break down. So as you can see, if we're just following a trend line point of view here, we have now basically broken down. We've broken down from our trend to the upside, right? If you kind of look into the trend line kind of point of view. Now, following on from yesterday's video, when it comes to Bitcoin, you can of course see that we finished our low point down here, and we look at this as a zigzag pattern. Although it is deeper than you'd usually expect, it has to be a three-wave pattern here under a 5-3-5. Okay, so then we started to move up. This move to the upside was going to be short-lived because we could see a lot of overlapping structures, no clear definitive breaks like we can see over here to the downside, right? This, for example, this is a clear break as it is a continuous move in one direction. Whereas over here we have these overlapping moves. We go up and then we come all the way back down, up, then all the way back down, up, then all the way back down, and so forth. So it's only really when you start to see these clear distinctions between where the direction is going do you actually start to see the formation of a new directional trend. So here we can see this overlapping short-term move, higher highs, higher lows, and of course the break to the downside. This is kind of what we talk about all the time, and of course we talk about these things using Elliott wave theory, smart money concepts, more complex subjects than simply just drawing a trend line. But the trend lines sometimes help just to depict visually what I'm talking about. So we have this move to the downside. Is this an Elliott wave theory trend? No, it's not. So an Elliott wave theory trend is defined, find some empty space, as a 5-wave move. Okay, and a 5-wave move has what they call an impulsive structure, and the impulsive structure has a set of rules that have to be applied to it. Okay, and we do talk more about this in the Elliott wave theory course on the membership.𝗕𝗘𝗪𝗏𝗀𝗏 website. And so what we can see here is that this doesn't meet some of those requirements. We go ahead and we measure the distances on this with the fib tool. Okay, we move this over to the bounce, which is here, and we can see that we cross down here to the 1.236, in fact lower than the 1.236. And because it's lower than the 1.236, we have to rule out a simple ABC structure, and we go more towards W, X, Y, X, and Z structure. Okay, so if that is the case, then we go ahead and move this now over to our bounce over here, okay, this being our X wave, and we'll come down towards our where is it here? Our little Z wave right inside here, okay? And I will remove that. So what does this actually look like? Well, our Z wave would basically, or W, X, Y, X, and then Z coming down into this range here. This is a 5-wave pattern that makes it look like we're doing something such as an impulsive structure, but we're not. It's all corrective. It doesn't meet those requirements that you would normally expect to see within the impulsive structure. So we now have a Z wave pattern potentially taking us down towards the 28,849 to 29,072. Okay, and it's an interesting one. Now, down here as well, you can see on our chart, we have this little green area. This green area right here is an internal buy order block. Basically, every time the prices come here, it's reversed, right? However, we've done this, we've tapped into this range once, twice, 3 times. Are we going to chew through all those buy orders by the time the 4th one comes around? Okay, that's up for debate. We'll see whether that is the case. Either way, we can see right down in this discount area, a double bottom is the most likely scenario here. We might wick down a little bit lower, creating a new local low. If not, it's going to basically be in the discount range and then out. Okay, so you can see here. Now, the thing with this, okay, and this could literally just be tapping into this range here and just coming down, you know, to 29,072. That's perfectly fine. But it would make me wonder whether or not we're actually in a 3-wave pattern to the upside here. So W, X, Y, and like that. Okay, we can see W, X, Y. So this corrective pattern to the downside, if it does not break this low of the 5th wave movement, okay, which I'll go ahead and put down over here, if it doesn't break lower than 28,867, then I would expect to move to the upside. Okay, and I would expect it to be a 3-wave pattern here. Then, of course, that would make me wonder whether or not this 3-wave pattern I have here as an ABC structure, or the 5-3-5, is actually correct, because it would lead me more to thinking whether or not we're going to have another 5-wave drop over here, which is fine. We could have a double zigzag. We could do something to that effect. Lots of different ways that this could play out. But for the most part, once we complete a Y wave here, essentially I would expect a break to the downside again. Okay, so what I'm saying, guys, it looks like we're getting ready for a potential move upwards, but we need to see this complete down here first. And again, taking a look at the structures of this, it's possible that this pushes up a bit more as well, and maybe also becomes a double zigzag rather than a W, X, Y, X, and Z. We'll see how that kind of plays out, but for the most part, that's kind of where that sits at the moment. Now, that's kind of the 1 hour time frame, right? And for those who didn't catch it, because I totally forgot to tell you guys, this is Bitcoin paired up with USDT on the BitGet spot exchange 1 hour time frame. And of course, if I am to go long, I'm going to be going long on BitGet. BitGet is my chosen platform for all my leverage-based trading, and 95% of my spot trading, right? So if you haven't yet signed up, and I do urge you guys to basically sign up to BitGet, the affiliate link is in the description below. Even if you don't use it right away, it's always great to have a backup exchange. Personally, I really like the platform. It's one of my go-to platforms for pretty much everything crypto now. I haven't been using Bybit for a very long time, although Bybit is also a very good exchange, and I do have an account there as well for my leverage trading I used to do there. I now have pretty much moved everything over to BitGet. So why not check it out? Affiliate link is in the description below. I don't think you would regret it. Now, when I take a look at my long position here, or the idea of a long position, I would be coming into this range. I'll be putting my stop loss down lower than the 28,849, and I'll be targeting to go long towards the 200 EMA. Get a good risk reward ratio above 1.5, and I think would be good there. It'll be interesting to kind of see how that one will play out, but again, that's kind of how I would look at it. I'd wait further. I'd wait probably to see how things come in, price comes down a little bit, see the structure of that move, make sure we're going to get the best entry we possibly can, making sure that we have good risk reward ratios and all that kind of good stuff. But a potential long here on BTC is something that we need to consider. Now, jumping over into the weekly time frame, I wanted to bring this one back up again. Something that I guess a lot of retail investors don't want to see, but something that I think is quite powerful nonetheless. What we've done here is we've got Bitcoin paired up with US dollar. We're on the Bitstamp 1 week chart. This basically gives us the big view of everything that's going on. And what I've done is I've drawn a curved line between all the high points. Okay, so the bull market at 2013, the bull market at 2017, and the peak that we have up in April and in November, right? So if we draw a line and we connect those things together, we can see here that we are seeing diminishing gains over time, right? We're not going to be expecting a 10x on Bitcoin, right? Bitcoin millionaires and billionaires are kind of done and dusted, right? It's not really where the money's going to be. And that's quite clear to see here. But even clearer than that is when we start connecting all the low points. If we start connecting all the low points, then it really does put us in a peculiar position here for where we stopped. We've stopped randomly in the middle, and that is not necessarily going to be very clear for us, right? It's not going to give us that kind of idea that maybe we're done here. So as you can kind of see, currently, if we were to just drop down overnight, then we'll talk about $11,000 to $12,000 to tap into this line on the low side. As time progresses, that will become more like 12 to 13 and so forth. But it looks like there's still a requirement here to maybe push down even deeper. Now, for those who know, obviously, I'm not a big fan of trend lines or just connecting things up like this, because it basically means that there's going to be a reaction to price within these levels. Now, for the most part, that's going to be correct, because people are going to overreact emotionally to things that they see like this. However, it doesn't really have that much of an impact if we were to break it down from a psychological point of view. From a psychological point of view, we have to focus in on the Fibonacci levels of where we've retraced into and how people are going to react to that. And of course, how people are going to react based on wave theory as well, right? There's a specific number of waves that people are going to respond to within the Fibonacci sequencing, and so if we couple support, resistance, the idea of fair value gaps and CME gaps, along with Elliott wave theory, then we can start to get a good grasp as to kind of what potentially is going on. Now, for the most part, we know that this is a corrective pattern coming to the downside, and it's very possible that we have bottomed. Okay, to me, this is a W, X, Y, X, and Z, and that's possible within an A wave structure. Unusual, yes, sorry, more of a W structure, I should say. My big fear is that we are in some kind of three-wave pattern, and we could stump out short here. We could come down a little bit deeper, curving this line even more. But for the most part, it looks like there's potential requirement here to move to the downside. You might not like that, but I mean, just connecting these things together. And again, you might say, well, let's go hypothetically say, right, that we do not need to concern ourselves with the COVID drop, right, the pandemic cross, and actually to connect the bear market. Well, it still shows us being a little bit short, but we could probably curve that up a little bit and say, look, we're done. It doesn't really give us a neat curve to this line, however. Possible, yes, but it would have to basically say, and we'd have to make the assumption of this doesn't count. And I don't really like that, because the price went there. And because the price went there, I think it's important that we do count it. Okay, and if we do count that, then of course we have this deeper move into a curved line. So for me, Bitcoin, although it has a lot of promise to it, I suspect it isn't yet really where it needs to be. Let me know what your thoughts are on this in the comments down below. But in my personal experience of understanding how to analyze markets and large data sets, I would say that this is a bit of a foreshadowing to what might be coming further down the line. Let me know what you think in the comments below. I think I'm going to leave the video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Guys, why not check out the memberships as well? You can get a 7-day free trial at membership.𝗕𝗘𝗪𝗏𝗀𝗧𝗏. Link is in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.